There's some really interesting price trends happening across the country right now. I mentioned last week how weakness in demand had led some measures of home prices to slide into negative territory compared to a year ago. This week, another signal of future sales prices slipped a bit and in a surprising way. So, another factor showing weakness in home buyer demand and weakness in price trends. Now, these are not catastrophic signs. It's not like there's panic out there. In fact, inventory of unsold homes on the market ticked down fractionally this week. There are fewer homes for sale now than a week ago. It's not uncommon for January to have a little ups and downs in the inventory numbers. If inventory were jumping each week, that would be notable, but it's not. The supply numbers are growing just a little bit. But as inventory builds and there are fewer offers from home buyers, more sellers feel the need to reduce their asking price from the original list price on the homes for sale. So price reductions kicked up this week, which is unusual for the last week of January. So let's look at the data. There's lots of data to look at this week. I'm Mike Simonsen. I'm the president of Altos Research here at HousingWire. If you need to communicate about the local market to your buyers and sellers, come join us at Altos. There's a link in the description below. Okay, let's take a look at the data for the final week of January 2025. So let's start today with the price reductions numbers. In recent weeks, I've shared how the data shows weakness for home prices. Prices are not falling or crashing, but most of our home price metrics are barely positive from last year at this time. Essentially, home price appreciation is flat versus 2024. We regard this metric, the percent of homes on the market with price reductions from the original list price, as a leading indicator for future sales prices. So looking backwards at the market, we can see sales prices are not really appreciating over 2024. And looking forward, we see weakness too in future transactions. The price reductions actually inched up this week by 10 basis points. 33.1% of the homes on the market have taken a price cut from the original list price. That's up from 33% last week. So it's a pretty small move, but it's in the wrong direction. When I say wrong, I mean that almost always this early in the year, price cuts are declining. Normally, fewer folks need to cut their price in the spring. At this time of year, really, there's new inventory, new buyers are shopping. But this year, in recent weeks, we can see that those buyers are waiting. So sellers who don't get an offer may choose to cut their price. So normally, there would be fewer price reductions this time of year, but this week, price reductions ticked up. And notably, this is the first instance of an uptick in price reductions in January in over 10 years. So in the chart here, the purple line at the left end of the chart is 2025. See that line turned the corner this week? It's up a fraction from last week, 10 basis points. And in fact, there are now more homes on the market with price cuts than even in 2023. The green line here is the curve from 2023. So now it's 33.06% of the homes on the market have taken a price cut. In 2023, it was 33.01%, so just 5 basis points more. But that means that there are now more homes with price cuts than at any time in the last decade for this moment in the year. So last week, I mentioned the possibility of this transition happening. It happened faster than I expected. So in 2023, housing demand was actually rebounding after a very slow Q4 2022. The green line was dropping each week as demand was rebounding. Now the market is decelerating, so more price cuts are kicking in. The purple line turned horizontal and even climbed just a tiny bit. So this is why the current data shows continued slow housing demand and continued weakness in home prices. There are very few offers being made right now, so sellers are finding the need to reduce their asking price. This trend is likely to continue until mortgage rates come back down. The median price for the home sales contracts entered this week was at $389,700. That's up up 1% for the week and is 2.5% more expensive than the home sales in the same week a year ago. So 2.5% annual gains for the homes taking offers right now. So in the scale of housing, 2.5% is basically zero, just barely positive. While there are plenty of markets that have home price gains from a year ago, there are also a lot of markets where home prices are declining. Last week, I shared that the median price for all the homes on the market across the US had recently dipped below a year prior. The median ask price is lower now than last year. This week saw a little uptick in the active market. So the median price for all the homes on the market is now $424,900, which is exactly unchanged from a year ago. So there's kind of an ironic scenario which might reverse the trend and push home prices higher in 2025. This is the one where the new administration policies actually really harm the economy. So there's a lot of chaos right now. Depending on the day and the latest headlines, some of those actions actually threaten to tank financial markets. So, for example, consider a scenario where the government follows through on these tax increase threats and at the same time reduces government spending. A shrinking U.S. economy would likely push bond yields lower. Lower yields on the 10-year Treasury lead to lower mortgage rates. This is the scenario that happened in 2019 in the last tariff trade war. So the economy slowed, so rates fell. By early 2020, mortgage rates were pretty low. So by the time the pandemic hit, the housing market was already heating up. So I don't have the ability to predict which of the taxes get enacted or whether they stay enacted. I don't have a view on how dramatically the financial markets react. I have no idea. Over the weekend, the markets were reacting strongly to these massive new tax threats. But then maybe those threats are gone now. So one side effect of the chaos is that bond yields fall. And wouldn't that be an ironic headline? Like, as the economy tanks, home prices soar. Anyway, who knows if that scenario happens? It's merely one scenario which might change the current trend of home price weakness in 2025. Now, in this chart, we're showing the median price of the newly started home sales each week, the new pendings. 2025 is the purple line at the left end of the chart. Home prices are just under $390,000 currently. That's just a little above last year, 2.5%. The blue line is the curve from last year. So we expect a little climb in this number over the next few months as the prime days of home buying season are still to come. Even in a weak demand environment, home prices will lurch higher this spring. Home sales tend to cluster around these big round numbers, and you can see the cap here at about $400,000 last May. Because of this clustering effect, it's hard to see the market busting past this plateau this year. There are 635,000 single-family homes unsold on the market now. That's actually a tiny fraction fewer than a week ago. As I mentioned, it's not uncommon for inventory to bounce up and down a bit in January, bouncing along the bottom before inventory starts building in earnest for the spring. But as I've also mentioned, it seems like we're already past the low point of inventory for the year. So that's very early in the year for supply to start growing. Our down moves are smaller. The upticks are bigger than they have been in a long time. We can see the same dynamic that's driving price reductions, also driving inventory. There are a few more sellers each week, but the demand is light, so inventory continues to build. There are 27.7% more homes on the market than a year ago, nearly 28%. So this isn't a new trend. It's been going all year, but it is maybe a little faster than we anticipated. So we forecasted 15% gains in inventory for the calendar year 25 over 24. The current forecast model is showing 17% gains by the end of the year. So it's maybe happening a little faster than we had anticipated. So this chart covers the last decade of inventory. You can see each year's curve with the most inventory available in the middle of the year. January and February are the low parts of the curve. At the far right end of the chart is where we are now. I've highlighted there's 3 years of rising mortgage rates, and that's led to 3 years of rising inventory. I've also highlighted where we were last year and where we were back in 2018. So there are still 17% fewer homes on the market now than back then. But as the year progresses, we're going to get very close to those old normal levels. There were just under 49,000 new listings unsold for single-family homes this week. That's actually fewer than a week ago, though it's still 10% more than last year at this time. So when we include the new listings that are already in contract, it totals almost 4% more sellers than a year ago. That's a little disappointing, to be honest. I'm hoping for 5 to 10% seller growth each week. I believe that would be healthy for transactions in this market. So in this chart, the purple line at the left is the 2025 year taking shape. Each week has more sellers and more homes unsold, newly listed than a year ago. Last year's line here is a blue line. And so that growth has been pretty consistent. It's still not a lot of sellers. The gray lines are past years. While 2025 has more sellers than 24, it's still fewer sellers than in past years. Right? In the fifth week of the year, in 2020, for example, just before the pandemic hit, we counted nearly 74,000 new listings. So that's 50% more sellers than we had this week. So the takeaway for the new listings data is that while seller volume continues to inch higher, that's a good thing, and this market could use even more sellers. Ultimately, home sales are restricted in the same way that new listings are restricted. We're moving less. We're moving less across town and less frequently across the country. And I've been expecting this trend to ease a bit in 25 with a slight resumption of people moving to the Sun Belt, but the trend so far is barely budging. There were 56,000 newly pending home sales this week. That's a nice nearly 8% increase from the week prior. This is the time of year when you'd expect home sales to grow each week, so that's good. In fact, home sales were actually a tiny bit higher than last year at this time. There were 1% more home sales started, new pendings, than the same week a year ago. Sales have been averaging recently nearly 5% fewer sales than at the start of 24. So I guess, any positive week is good news. And that's what we're looking at with this chart. So the 25 purple line has been trending lower than the 2024 blue line. This week bucked the trend with a little positive move to 56,000 new contracts started. There are now 282,000 single-family homes in contract. That's 3.5% fewer than a year ago. So there are fewer sales pending now than last year at this time. These are sales that will mostly close in February. So by our count, the February home sales headlines, when they're released in a few months, will be pretty bearish on home sales. 2024's weak period for sales was late in the summer. That's right in the middle of this chart. And that point last year was when mortgage rates had jumped again and home buyers got really discouraged until September. So who knows what happens with the timing of mortgage rates during this year? But if we're lucky, maybe by summer mortgage rates have eased, so 2025 could show a gain in home sales at that time. Now, that's just speculation, but it's something to watch for later in the year. Okay, that's all the data we have time for today. If you need to communicate about this housing market with buyers and sellers, you should join us at Altos Research. Go to altosresearch.com, and you can now sign up for a free Altos account to get your local data. We'll help you dive into the local market, help you start helping people understand the market today. So go check that out. Link below. More next week.